Investor Connect podcast program. This is Hall T. Martin. I'm the host of the show, in which we interview angel investors, venture capital, private equity, family offices, and many other investor groups for startups and growth companies. I hope you enjoy this episode. Thank you for joining us. Well, hello, this is Hall Martin with Investor Connect. Today we're here with Michel Wendell of Nexit Ventures. Michel, thank you for joining us.
Thank you very much. My pleasure.
Can you tell us a little bit about your background before you started investing in early stage companies? What did you do before this role?
So my role prior to this, and I've been doing venture investing for about 20 years now. Prior to that, I had a sort of a mix of big company experience as well as entrepreneurial experience. And actually, I ended up here in the US in Silicon Valley back in 1996 through an acquisition of a small company I had started in Paris, France. And then stayed there with the acquiring company for as long as my contract dictated. And after that went off and dabbled around a little bit for a short period of time prior to then in 1999 with a friend of mine in Finland, we started to raise a fund called Nexit Ventures and closed that in 2000 after the market and everything had crashed, but still close to 100 million euro fund at that point with a focus on Northern European and US West Coast companies, and that's where we got going.
So for those who are starting to make investments into early stage companies, what would be your advice to those new investors into this marketplace?
I think that people have to these days be very aware of the fact that whereas there is a lot of capital, there is also a lot of competition for that capital, and there is certainly a lot of competition for anything really valuable and good in the marketplace. So you have to be really, really sharp and focused and sort of well-defined on what is the problem that you're trying to solve and how are you going about solving it. And as always, it's important to really sort of understand the opportunity space first, but it's also, of course, very important to understand, how can you bring a really compelling solution into a problem. So hasn't per se changed that much over 20 years, but I think that just given the amount of entrepreneurs and just the quality of everything, how that has developed, one has to really be really determined and sharp and knowledgeable about the space that you're getting into.
Great. Well, you invest in European companies, primarily those moving to the US. How do you see that industry evolving? How are startups getting or improving or growing from Europe that you see today?
I think that they sort of doing better and better. Again, having quite a long experience in this, I must say that I have seen a tremendous positive development in the European startup scene in general, on all levels, from sort of the quality of the people, their lingual skills, their cultural skills, their sort of sharpness on the business side of things rather than only sort of technical solutions, which tended to be more of a sort of issue with many European startups early on. So I think that they're doing extremely well these days. They have a very important sort of advantage in that they actually already have sort of usually to some extent touched on their own market or the European market and have got some of their issues or challenges shaken off before they come here. And there is, of course, an interesting price or value arbitrage between the European market and the US, as there is between the Asian market and the US also, in that it in many places actually is a little bit cheaper to get started and to develop stuff in Europe than what it is in many places here. Austin probably being still on the better side compared to either of the coasts of the US.
Great. Well, it sounds like there's some good startups coming out at reasonable valuations, and so it's quite an opportunity for investors to get involved with that. Do you see that staying the same, or do you see that changing over time? Do you think valuations will go up as demand goes up?
Yeah, maybe it does, but still I think that from a pure valuation point of view, there is still going to be sort of good opportunities for US investors also in Europe. And I think for US investors, it has always been a question of not so much the valuation purely, but just the risk of getting into something that is more unknown to them than sort of the investment scene here locally. And I think that is sort of a problem that is shrinking in that there is more and more really professional investors and co-investors in Europe that probably take some of these risks away. And then also just the quality of the entrepreneurs and the deals getting better as the same. So I think that there is sort of room for the valuations to come up, but I still think that based on our experience, it still is reasonably competitive, or sort of you can find really good price performance.
So what is your investment thesis? What kind of startups do you look for, and what criteria do you apply?
So when looking at really early stage stuff, I still belong to the sort of old school people that think that it's all about people. And there is my long history in this and the many deals I've been involved in. I must say that in the best ones, most of the best ones, you still have the same guys doing it when you're successful as when you started. And so in that sense, it really comes down to people a lot. I mean, markets and opportunities and all of these things change so many times. But if you have a really good founder or a really good sort of small nucleus team in the beginning, and they stick together and they sort of can navigate those waters, those are sort of, in my mind, really one of the key cornerstones in good investment. But then if you look at sort of areas and so forth, we have tended to be fairly technology oriented, mostly in the mobile telecoms and that kind of area, more B2B, not really touched sort of consumer stuff directly too much. Or probably in the fund that we're going to raise here soon is going to be focusing more on probably general disruption, and also probably moving a little bit more later stage than really sort of seed and really early stage rounds, given that there is plenty of that kind of money going around all around you as we speak. And I think that the biggest market opportunity there, but also the biggest problem for the entrepreneurs, is to find the investors that come in once you are at the sort of A and B round stage. And these rounds, of course, happen earlier in Europe, I think, than they do here. In Europe, you don't have $7 or $10 million A rounds really that much. They're smaller.
So what startups fit that thesis? Are there some examples that you'd point to that have great teams that really fit the model that you look for?
Not having done really that many new investments in the past years, whereas we had a big portfolio that we focused on, but I think that one that I could point to, which is as such is not a new investment in that we got into it probably 18 years ago and exited the company only now after a couple of pivots. But there we have had sort of core people that have stuck in for a long time. And through the pivots and so forth, this is a company called Ekahau that was sold to Speedtest Ookla, and basically is in the space of Wi-Fi network validation and design, which is, of course, a very, very fast-growing market as such. But just to pick one example of something.
Well, for the European companies that are moving to the U.S., what kind of challenges are they finding in that effort? Just to put a focus on that discussion there.
Well, often they don't really necessarily have as good of a handle on just the sort of the go-to-market in the U.S. and, channels and stuff like that. The product development and sort of the back end of the store is something that they manage usually very well, but it's marketing, go-to-market, and all of that tends to be more challenging, but that's also, of course, where the big opportunity here lies. So that's one place where they usually have to start off with actually bringing local people on board, which then can have challenges in the beginning in that just people that come from vastly different backgrounds do not always understand or perceive things exactly the same. So that's one typical area. Another area which is probably something that the investors as such deal with more is the capitalization of European companies and what happens. And do you continue to, when you come to the US and you get US investors in, do you continue to sort of fund the European company, or do you do a so-called flip and sort of have a US Inc. set up and the European operation becomes a wholly owned subsidiary? And all of the sort of both challenges and opportunities that are involved in that are typical things that we have to deal with and solve in different ways.
What's the advantage of doing a flip?
Doing a flip has had sort of two main driving forces in the past, at least. And one of them has been the U.S. investors, in that there has been a lot of VCs who have said that they don't have, or based on their limited partnership agreements and what have you, that they cannot invest in non-U.S. entities, which in many cases, I guess, has been correct. But they just have not really, of course, had the full understanding of how it works. And legislation in different countries is different, and that might impact on a lot of things in regards to a funding or sort of ownership of a foreign entity. So that has been a big part of the resistance. That has to some extent gone away over the years because people from the US have done more and more investment in European companies in different countries there. That's probably one of the main things from an investor point of view.
Given the many sectors that are represented by European companies such as AI, big data, cyber, and others, which are the immediate opportunities you think are worth pursuing given where we are today?
I would, in general, look into areas that sort of are based on some of the typical strengths in Europe. And Europe, the universities and research and so forth has always been very strong in Europe, and it has a long legacy. And they create very good technical talent. And Germany has traditionally been very, very strong in areas like anything mechanical. Look at their car industry and their mechanical industry in general, or they're strong in finance and so forth. In the Northern European countries, they have been very strong in the telecoms. They have been strong in databases and sort of really complex algorithmic stuff. That goes for most of the Eastern countries, sort of ex-East Bloc countries also. So I think really looking at the strengths of the different areas is probably where you find the kinds of companies that really can have a global impact.
Well, that's great. Well, what else should we cover that we haven't so far?
Well, from an Austin point of view, given that I'm a very recent transplant into the Austin scene, I think that one of the things that I'm really looking forward to is sort of being part of the stream of European companies coming this way, and that will be looking for getting a foothold into the U.S. market through Austin, and of course, hopefully setting up shop here, being able to bring on board resources here, both sort of development resources as well as go-to-market, sales, marketing, all that kind of resources. And then, of course, bringing in just these types of opportunities also for the local investment community to get exposure into something that has a slightly different profile than the types of companies that they see here locally.
Great. Well, how best for listeners to get back in touch with you?
Our website is nexitventures.com. There's my phone number, my email. We are a very focused small team in the sense that we don't have associates or sort of really other screens built in. So the number that is there is actually my phone number, and the email comes directly to me, and I reply to as much as I can. And I try to do as good of a job as I can. And so it's just get in touch if you have something that you think that might be of joint benefit and interest.
Well, that's great. Well, we'll put that in the show notes, and people can contact you directly. And thank you for taking time to join us today, and hope to have you back for a follow-up soon.
Thank you, Hal. My pleasure.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Paul T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.